More than 100,000 people who do their own taxes had still not registered for the biggest shake-up to UK tax in decades. That's the latest estimate from the Low Incomes Tax Reform Group, and the first deadline is less than a month away. If you're a sole trader or a landlord and your self-employment and property income together topped £50,000, Making Tax Digital, or MTD, went live for you in April. Your first quarterly deadline is Friday the 7th of August. Here's the entire job in one line. Send HMRC your income and expenses totals for the quarter through software. That's it. It's not a tax return. But HMRC has also said there are no penalties for late updates in year one, and that promise is a trap. In the next 5 minutes, exactly what you have to file, why that penalty-free year catches people out, 3 mistakes to avoid, and a plan to get it done in time. First, are you actually in this first wave? Here's who's in this first wave. You're a sole trader, a landlord or both, and your 24 to 25 tax return showed qualifying income over £50,000. That's gross income before expenses across all your self-employment and property combined. On HMRC's own estimates, that's around 860,000 people. And as of June, the LITRG reckoned about half of those doing this without an accountant still hadn't registered. But before you panic, you need to know what you're actually sending, because this is where the confusion starts. A quarterly update is not a tax return. HMRC doesn't want a tax calculation. No adjustments, no allowances, no working out what you owe. All it wants is your category totals, income and expenses for the quarter, kept in digital records and sent through compatible software. For many people, that's one screen and a handful of numbers. Even better, updates are cumulative across the year. So if you spot a mistake, you fix it once in your digital records, and next quarter's update carried the correction with it. No amendment forms, no resubmitting all quarters. Check the totals, press send, move on. That's the whole job, and the deadline for this first one is Friday the 7th of August. So far, so gentle, and HMRC has confirmed there are no penalties for missing a quarterly update this year. But that promise is the most dangerous sentence in UK tax right now, and here's why. HMRC has confirmed there are no penalties for missing a quarterly update deadline in the first year of Making Tax Digital. And it's very easy to hear that as, so the 7th of August doesn't really matter. That is the trap. The updates are still required. Skip one and you don't get a free pass. You build a backlog, because at the end of the year you cannot submit a tax return until all 4 quarterly updates are in. Miss one now and you're clearing that backlog later against a hard deadline at the busiest point of the tax year. And penalties for filing that tax return late or paying your tax late, those still apply. So, burn this into your brain. No penalties on updates does not mean no consequences. File it anyway, especially the first one, while the habit is cheap. Quick 10 seconds, this is a brand new channel, just me and a microphone, so if this is helping, a subscribe or a share with a self-employed friend means a lot. Right, back to the deadline. Here are 3 easy mistakes to make in your first 3 months of Making Tax Digital. Mistake 1. The wrong dates. Your first quarter runs from the 6th of April to the 5th of July, not to the 30th of June, unless you actively choose calendar quarters in your software. Mistake 2. Thinking 0 means exempt. No income and no expenses in a business this quarter. You still file, it's called a nil update. Expenses but no income? You send the expenses total. And updates are per business. Run a sole trader business and rent out a property, that's 2 businesses, therefore 4 updates each, 8 a year. Mistake 3. Banking on an exemption. Exemptions do exist for things like age, disability, health conditions, religious beliefs, or no practical internet access. But I'm not good with tech. The cost of software or preferring paper won't qualify on their own. If you're not exempt, this is happening. Here's your Making Tax Digital Survival Plan. 4 steps before the 7th of August. Step 1. Today, confirm you're in. Sole trader or landlord with qualifying income over 50 grand on your 2024 to 2025 return. Step 2. This week, sign up with HMRC and pick compatible software. HMRC publishes the list. Don't leave this until deadline week. Accountants are already reporting clients stuck on bank fees that won't connect. Step 3. Get your quarter's income and expenses into the software and check the totals are accurate before you send. Step 4. Press send by Friday the 7th of August. One update for each business. Do the setup once, and every quarter after this gets easier. The scary part was never the filing, it's not knowing. And now you know. And this is only wave 1. In April 2027, the threshold stops to £30,000, and on HMRC's own estimates, more than 1 million people could get pulled in. So subscribe, because I'll cover every deadline and every rule change before it hits you. Now, tell me in the comments, are you in this first wave? And how is the software treating you? Your answers decide what I put under the microscope next. Thank you once again, and don't forget to subscribe to the channel. See you on the next one.